From Wish TV and the All Indiana Podcast Network, this is the Business, Equity, and Opportunities Podcast with Scott Sander.
Welcome to the Business, Equity, and Opportunities Podcast. I'm Scott Sander. On this episode, if your minority business needs access to capital, we have some options. Will a major redevelopment project make it hip to be square? And CPA Courtney Kincaid has tax time tips.
Every business is unique and has a target audience. If you own or manage a business, Circulus Digital Media can help you connect and grow your customer base with turnkey digital solutions that are nimble, offering best-in-class results, service, and support to reach a bigger customer base, allowing you to pinpoint a specific audience down to the smallest details. Get outside the city, the state, span the globe. Put Circulus Digital Media to work for you. Get started now at circulusdigital.com. That's circulusdigital.com.
Welcome back to Business, Equity, and Opportunities. I'm Scott Sander. Cambridge Capital Management is a private equity firm with a large portfolio, including Links, established in 1991 to create, expand, diversify, and support minority-owned businesses through growth capital. We spoke with Gene Wojtowicz, the founder and CEO of Cambridge, about the many resources that may be available to support your business.
This is Business, Equity, and Opportunities. Access to capital.
Cambridge was established actually 40 years ago to be a provider of non-traditional sources of financing for business. And so under that title, we have a number of different financing opportunities for businesses. And over the years, when we found new gaps existed, we would go out and help create a new fund, a new pool of capital available to help fill that gap. Banks can't do everything. Banks rent their money to businesses, and as a result have to do it in a fairly secure way. And so we're seeing that there are, when we have this kind of an economy, potentially getting tighter, that what banks can do starts to get smaller, and so then some of these non-traditional sources have to come in to fill those gaps. Most of our lending programs end up being somewhat counter-cyclical, so as times get tougher, we get busier. There are opportunities, perhaps with less risk than they used to see. When banks were very flush and the economy was very good, banks would stretch further in order to get their outstandings and felt they weren't taking as much risk. That left a much narrower gap for investors and non-traditional sources to fill. As banks tighten, the gap that investors and non-traditional sources can fill gets larger. So it ends up, it's a balance, but I think we're going into a period of time when those non-traditional sources and investor capital will see more opportunities. Yeah, so it's interesting. Links Capital, which we actually established in 1991, so it's a fund that has been around a long time and has always only been focused on providing capital to minority-owned companies, and that's specifically racial minority companies. So as a woman and a Caucasian woman, I wouldn't qualify. This has always been focused simply on racial minorities that need additional capital to grow their businesses. Yeah, it's interesting. When people need money, it might be only once every 5 years. So trying to go directly to those businesses is a very inefficient way that you're going to try to hit that target during that 1 year in 5 that person might be needing capital. So instead, we try to educate those people that see a lot of business opportunities. So we start by educating the banks, because many people still believe if I need capital, I go to the bank. And that's certainly a great place to start. It's a very inexpensive source of capital. And we try to make sure that we're training and educating our banker partners to know that if you have to say no, I'd rather you say no, but. Because there are a number of other resources that can help fill that gap and potentially then grow that business into the point that they would be a good prospect for that banker. And then we also go out to others that are advising businesses, so accountants, attorneys, financial advisors that might see a lot of businesses at any one time, and hopefully one or many of those might be at a stage that they would be looking for capital. You know, in Links specifically, we're looking for established businesses that have at least 5 employees And when we established this fund, the intent was that if we could take those companies that had at least a little bit of girth to them and provided capital to allow them to grow, we would ultimately create better role models in the minority business community. And we know from lots of studies that many entrepreneurs are spun from an entrepreneurial experience. So if somebody is working for a company that is growing and becoming successful, often that senior management team sees that as an opportunity to spin off and do something similar or complementary. We also felt that if we could grow some better minority-owned success stories, that becomes inspirational to others that are looking to start that path. So we've always believed that risk and reward cannot be unbundled. If it's more risk, there's going to be a higher price associated with that risk. The other side of that is when we go into a transaction and price it for the risk on the front end, that if that borrower and that company can begin developing the behaviors and criteria necessary to ultimately become bankable, we will reward them with a reduction in cost. So for instance, we might go into a transaction and say, yes, your loan is priced at this level today, but if over the next 4 quarters you show profitability, and if you report your financial statements timely, if you have positive net worth, and we might set aside a number of those kinds of criteria that are going to be necessary if you're going to be a good bank customer. If you can start to show those behaviors, then we reduce the rate because our risk is less. And what we really hope to accomplish in all of that is that ramp that takes you from perhaps more expensive money because there's more risk, down to a point that you've developed those behaviors, it has become common and comfortable to do that reporting and to understand why it's important, so that ultimately you can get to a point of less expensive financing. You know, we're so fortunate here at our company. Half of our employees and our team members have been with us for more than 25 years. So we have a lot of longevity. And people love what they do because they are making a difference in people's lives. And not just in the business owners' lives, but we often have people come in after they've paid us off just to come in and say thank you, that you not only helped me grow our company, we've employed this many people, and those people depend on my paycheck to raise their family. And so it becomes very real. And then just the ability, you know, again, while we've been at this a long time, we have put more than $890 million into 1,900 Indiana companies. So we've touched lots of lives.
We first introduced you to Soho's Capital last year. It is an Indianapolis-based real estate development company that has big plans for the West Side, including bringing more opportunities for business as part of a bigger redevelopment of the area around the former Lafayette Square Mall. The vision is a neighborhood called The Square, which would include dining and shopping, housing, office space, youth education, sports, a film studio, and entertainment, with infrastructure improvements and public safety to then support development. Today, we check back with Fabio Dela Cruz, the principal of Soho's Capital, about progress so far and the next stage in the shaping of the square.
This is Business, Equity, and Opportunities. This Week in Business.
We thought that in order to capture really well the essence of the neighborhood, we couldn't dismiss the larger legacy that this neighborhood has to bring. And as we were talking about that, I start to feel that every person that I talked to mentioned the fact when they came to Lafayette Square Mall, when they were young, when they came with their parents, with their uncle, I don't know, Christmas. Everybody has an emotional connection with it. And that's why at the same time, our master designer, he found the original entrance of the mall. And he was like, look how cool this is. And I'm like, wow, that's amazing, because he was at that time like a futurist entrance. And now it's something that somebody will recreate now. And always I thought that I'm going to have to put this kind of competition to be sure that I create a landmark that people can see outside of the States of what we are about. But this is even deeper because it's actually the essence. And as we took those pillars and we color those pillars, we say now we have finally the totality of the legacy of this neighborhood. This place that was so low for so many people, and this new neighborhood of people coming all around the world living together. And that's why the square was also a reflection of that. We have a different department that was marketing. They asked us, we think that this will be a good name to bring to the whole project, and it was in the same line of what our main thing will be. That's why now we're more excited than ever, because it makes sense. We're having something unique that reflects our values and what we've been before, and is something that at the same time has this modern tweak that we can call a landmark. In every piece of the project grew for different reasons. We have some projects like the Alamos Draft House, the place that was beside the building that we also own, got vacant. Now we decided to expand it, and that got bigger. The sporting complex, the idea was to do one. Now we're up to 4 or 5. Yeah, everything grow, and the parcel of the mall that always was the part that we had to develop the most. It grew from what we thought that is going to be around $200 to $300 million, because the idea was to put the cash that we have and finalize it with the cash flow, and keeping the buildings, not in the way that they were, but keeping the structure of the buildings and kind of rehab it. Now, with the construction costs going to the roof after the pandemic, we couldn't do that anymore because the numbers just didn't work. The numbers will work if the project was bigger. That's why now the project on the parcel of the mall and the whole neighborhood is going to be easy between $700 to $1 billion. I came to Indy 20 years ago. My first job was in Don Pablo's as a busboy. I became a loan officer. After that, a real estate agent. I sold a lot of properties here when I was a real estate agent. But my career started in this neighborhood as an investor. I started to buy residential properties first. After a while, I started to buy commercial properties. After a while, I control most of the neighborhood, and that's why everything that I had or did, or even to put family on the table, that is obviously the most important job that I have, is being done through this neighborhood. That's why I have a deep emotional connection with it. I've been helping the neighbors associations for a long time. We've been helping this, but in a different way, because before, as an investor, was like one residential at a time. After that, one commercial at a time. And now I have the whole neighborhood. Now it's the whole neighborhood. And that's a totally different thing, because I always try to dream big as long as the opportunity get me there. This case was the same. Now we control the neighborhood. How we can use the opportunities that we have to go really big, and we found opportunities that I never dreamed that we can have when I started the journey. I don't need to be remembered. This is not about ego. I would love to see them enjoying the best neighborhood in the country, because I really believe that we have everything that it takes. After visiting most of the best neighborhoods in the country, after seeing the opportunities that we have, we can pull that off. That's why if I will say something in 15 years, it will be somebody enjoying what we come out with and be really happy that we have the courage to move forward on this.
The government is now accepting and processing tax returns, so tax season is here as you run your business day to day. For the small business owner, that means tackling your own personal taxes, those of the company, and those of employees. There are people who can help ease that load. A certified public accountant, Courtney Kincaid, is the head of the Indiana CPA Society.
This is Business, Equity, and Opportunities. Running your business day to day.
It's tax season, which means your CPA is busy. It's individual filing season, so returns are due in mid-April. And so we just wanted to talk a little bit about what that means and what that means for your relationship with your CPA. A lot of people sometimes say, I gave them all of my information and I haven't heard anything back, or it's taking time. And so just wanted to cover a couple of reasons why that might be. There are always legislative changes. seems like always lately, whether that's at the state level or the federal level. Last year I was talking about pass-through entity taxation, and that was local retroactive tax legislation, but we have a lot of tax bills still up in the air federally as we do this interview. We have a lot of questions surrounding the child tax credit, and so whether that's going to be expanded or not. As of now, it's passed the House and it's up to the Senate, and it looks like it will pass and would be retroactive. So if you make a quick file in the beginning, because you are able to file now, what will happen is then you're going to file an amended return to make sure you're getting that benefit. So even though your CPA may be waiting for some clarity on some credits you might qualify for, it's a good time to get together all of your resources, all those pieces of mail that you've gotten with your various schedules and forms, and start getting them over to your CPA. Yeah, as business owners are, getting those forms together to give to their employees, just make sure that you are complying with records keeping, making sure that you are keeping the records for the set amount of time, and it depends on what the actual record is. You can usually find guidance. As the employer, you do have that requirement. So, there is burden on the individual, but you also have to retain those records for a set period of time as the employer. Something else that we've talked about is retroactive legislation. And so as different things happen in the local government or federally, you may need to file amendments. Your CPA is aware of these, and sometimes that might be why they ask you to file an extension. It's not necessarily their workload. It's that, they're waiting for some clarity on how things are going to be handled. We have heard as tax season has opened at the Indiana Department of Revenue that we are having some taxpayers who are using old forms, which is leading to a lot of confusion and can lead to potentially some fees. There are barcodes that are on these forms that the way that they're processed at the department will tie that payment or that credit to the wrong account. So just make sure if you are great reason to work with your CPA, right? They know that. But if you're working independently, making sure that you're using the proper forms for the current year. Otherwise, it's going to lead to a big headache for you.
Our thanks again to all the contributors who joined us for this episode of the Business Equity and Opportunities podcast. We hope you found it enlightening, useful, and inspiring. You'll find more information about the show on our website, beoshow.com. You can watch Business Equity and Opportunities Sunday mornings at 10 on Wish TV or live stream it through wishtv.com. Each week we provide 7 full segments with topics ranging from how to get started and how to access capital to the day-to-day running of your business and questions about accounting and bookkeeping. We feature business news and trends and always share a success story from one of our contributors. Join us next time for more insights into the world of small business. Be sure to sign up for our Business Equity and Opportunities newsletter to get even more valuable, up-to-date information. And if you have any questions or you'd like to be part of our show, please email us. The address is beo@wishtv.com. We'd love to hear from you. I'm Scott Sander. Thanks for listening.
Watch the Business Equity and Opportunity Show on Wish TV and access all of our content and share it on demand anytime at beoshow.com. You can find more podcasts from Wish TV on the All Indiana Podcast Network at allindianapodcastnetwork.com.